traders at the New York Stock Exchange, off the CME. And let's start with you, Matt, because it seems, well, okay, let's go to Alan then. Alan Nuckman, if you can hear me, let's go talk to about what's happening at the G20, since I think all eyes are on Xi and Trump.
Yeah, I'm optimistic. I think something good could come out of this. The market obviously has been very negative for a long time. We could get a positive bounce. But from my perspective, a price guy, I see a lot of positive. As far as the eye can see, we've got positives. We got one rate cut now priced in for 2019, down from 2.5 or 3. We took 3 days to erase all of last week's losses. The 10-year note's down to 3% for the first time in 2.5 months. Crude oil made a new low and a higher close today, so some of those energy stocks could maybe bottom out. And the dollar index had a key reversal, a weekly key reversal a couple weeks ago, and it's still off that top. So all that adds up. I think the market can make a healthy comeback and follow through on the big bounce yesterday.
Matt, I was looking for you. Apparently you're up and ready. What do you think of the markets?
Well, we have really nice reversals, so I missed some of the beginning. I apologize if I continue on. But, you know, I think the key theme today we saw was oil. We had that reversal from the lows below 50 in WTI, and that really sparked the market. And then we got some Fed commentary again today. That was the leader yesterday for the 600-point move. And if we get anything out of China tomorrow, this market really could accelerate higher.
Yeah, it could spark. Todd, what about the world and the Fed and the world changing in 24 hours with 4 words of close to neutral?
Yeah, I think that yesterday was sort of a preliminary from Fed Chair Powell to today. And actually, you can throw in Richard Clarita's comments earlier this week. And I think right now the Fed is going to be cautiously optimistic. Yes, they want to keep rate hike talk on the table, but they want to let the data do the speaking for them. And I think that Alan is exactly right. We've seen the market take the Fed from 3 rate hikes down to 1, I think, for next year, unless something dramatic happens. And what we're going to get out of G20, hopefully it's clarity. And I think if you look at the Trump administration, they like to shoot first and talk later. And that's what they've been doing over these tweets and over the media and everything. And now things are going to come to maybe some resolution, some clarity. And once the market gets that, we can start to trade again off of some of the fundamentals and off of some of the earnings numbers that maybe have been overlooked, I think, during this entire mess.
Alan, do you agree the Fed's only going to go once next year?
That's what the markets are telling us. And even before this, when you looked out, the interest rate hikes were stopping in September of next year, and then all the way out to 2023, there weren't any. So essentially, the markets had priced in the fact that we were going to get maximum up to 3%. So that's still significantly lower than the average and then normalization in rates. And everybody had been overly concerned, I think, but the market was telling us what they thought was going to happen, and they were obviously more right than a lot of pessimists.
Is that true, Matt? Because a lot of people probably missed that oil trade when they were long oil, short nat gas, and that reversed in a hurry.
Well, you know, I mean, anything to do with the Fed now, they're going to talk about how they're going to be able to spin this to the public. It's a crisis of confidence here maybe in the Fed. You know, we had comments out of Trump a little bit earlier about not liking what Powell's been doing, and suddenly we get some dovish comments. So all of this is going to come into play in the market, and the fact that they're finally looking at the data for the first time and saying, you know what, maybe it's not indicative of 3 rate or 2 rate increases next year. Maybe it's only 1. That's why the market's rallying.
Okay, well, everyone sounds so bullish, Todd, but then why is the 10-year Treasury still at 3%? That doesn't sound like a bullish world to me.
Well, I think right now you still have a lot of concerns globally. Perhaps a little bit about credit, perhaps a little about global growth outside the U.S. There is still a good demand here for 10-year note treasuries, even with the Fed unloading their balance sheet. So I think that 3%, if we break below 3%, that could trigger some momentum to the downside yield-wise, upside price, and that could really change things here. But for now, I think 3% held today. It'd be nice to hold it over the weekend, and then don't forget, we've got employment next week that could throw a whole nother trade out there if we're below 3% or above it.
Finally, guys, I'm just going to get a word each from all of you. Is this the Santa Claus rally? Matt, you go first. Yes? No?
It's not a Santa Claus rally. There's too much out there for that. But we'll take some retail numbers that have been kind of positive. So, yeah, we'll call it somewhat slightly Santa Claus rally.
Oh, come on. Alan?
Yes, I'm bullish. The S&P's traded between 2,600 and 2,800 for almost all of 2018. So we were just down near that low level, made a double bottom and a bounce. So I'd rather be a buyer than a seller here at these levels.
Todd?
I see the VIX index. It's holding above 17, a level we only saw once in 2017. I think the higher volatility level suggests lower prices ahead.
Okay, thank you so much, guys. Matt, Alan, and Todd, have a great day. Let's quickly check in on the Dow before we go to commercial break. And as I said, a reversal of those lows of 163 points down. It looks like we reverse up now by 81 points. Coming up, the cost of your next ride.